Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for the 8th of November. It's a Thursday, as maybe as exciting as yesterday was. Today was almost equally as boring. We did see some selling over in the energy sector, and crude did continue to sell. We did see the dollar rise off of that support level that we've been kind of eyeballing these last few days. So there was a little bit going on today, but really the market's closed pretty flat. As expected, the Fed did not change the rates or anything like that. So, no shock there. So, I mean, it was one of those days, kind of boring. We do have a handful of earnings coming out tonight for S&P companies and the Dow Jones in regards to Disney. Disney, just at first glance tonight, it looked like they beat earnings and revenue expectations, although I didn't get much of a chance to dive deep into it. I did want to just briefly share one of my favorite things to do, and we saw it on Trip this morning. And maybe we can see it on Disney too. I don't know. We'll have to see. Right now, we still got a lot of time between now and the open. Those of you who follow Disney, maybe it's easier if I just bring this to a weekly chart. Those of you who do follow Disney probably know they've got a lot of resistance at that 120, just kind of sitting right on top of us. And I always like when a stock gaps into resistance on earnings or on good news, usually earnings, as you can kind of see here. Disney up a little bit in the after hours trading, certainly nowhere near 120. And so then this is just going to have to be an example, right? I don't know how this is going to play out. But one of the things I like to do is watch things that gap into resistance and then watch them for breakout opportunities. We've seen that a few times this earnings season. We saw it on Zoetis a week or so ago. And we saw it on Trip here this morning, where we gapped into resistance on the open and then pushed through it. Now, Trip took off, and they had strong earnings, at least in my opinion, and they really were able to take off nicely from that point. Obviously, that was a big move for Trip, but I always like it when we gap into those earnings, or earnings gap into resistance, because we have to make a call, right? At least short term, do we push through, creating a breakout? Do we get pushed down because resistance is just too heavy for us? So it'll be interesting to see if Disney's able to work its way into that 120 tomorrow. Again, there's a lot of time between now and then, so we'll have to see how it opens. But at first glance, it looks like they did okay. We don't have any earnings coming out. Well, S&P 500 companies, there are earnings, but no S&P 500 companies coming out with earnings here tomorrow as we kind of continue to wind down on earnings season. So interesting times. But Trip caught that break and it really ran. So always fun things to follow in my mind, at least. Taking a look at our indexes, I mean, really long story short, if you don't have a lot of time today, we really are pretty unchanged. Not a lot of selling, not a lot of buying from a market-wide perspective. Here you are on the S&P 500, doging at that resistance level where we closed, of course, here yesterday. Taking a break, on the one hand, it's not a whole lot of new information. On the other hand, great place to take profits, and, nobody really did, at least broadly speaking. So we'll have to continue to monitor that price point. Obviously, I think a pullback is not unreasonable, but we can also look at it to break through that, as we've talked before. So, but really not much changed over there. NASDAQ down a little bit, nothing substantial, nothing that changes the way it looked from yesterday, in my opinion, at least. We're able to break out, break resistance, and of course, hold that resistance level here today. Honestly, I wouldn't mind another boring day tomorrow, so we could start fresh next weekend, but we'll have to see how it plays out. It never asks me how I want it to play out. I just ask it anyway. The Dow continues to be one of the stronger areas, as we saw it continue to push up, not much, but did close officially up on the day. Nothing too crazy or anything like that. Really, it's broken through resistance. It's broken through its 50. It's definitely taken out more challenges than our other indexes have, at least at this point. So, traders continue to really look towards that area, no doubt about it. And then on the Russell, kind of ran out of steam today. this is still, in my personal opinion, the best looking from a bearish point of view chart on our indexes. Haven't broke resistance, haven't broken any major moving averages. In my opinion, got a lot of reasons for it to have a hard time at 1600. And so from a bearish perspective, if we see that pullback, this is going to be kind of one of the areas that I would be more interested in. And we're just kind of thinking from a broad perspective. I don't know if we'll get that or not, but I would expect 16 to be a challenge. And, hey, right now we haven't broken resistance yet either. We've done a few positive things, right? Kind of established momentum, taken out some short-term resistance and moving averages, but we haven't done what some of all of the other indexes, right? All of them have been able to take out bigger challenges. And maybe it was just because they were closer. I don't know. But whatever the reason, we still have some challenges ahead for us on the Russell, in my opinion, at least. Over in the material sector, very flat day, going to be kind of the story of today in a lot of areas. We're able to kind of close, right inside yesterday's candle, right on the, top end of that old support level. Again, extended to the downside. From a bearish perspective, I want to see it break back down below there. I'd have to anyway. That'd be breaking today's low, or I think, yesterday's low would be the first signal. But honestly, I understand why people want to go bearish in the material sector, and I'm not really going to make much of an argument against it, but I don't like the way its chart looks from really that point of view. I mean, I wouldn't want to buy it either right here, but you guys know me. I have certain areas that, I'm a lot more happy to jump on, bullish or bearish, like, real estate and tech, utilities and staples. I'm always excited about those. Real estate materials, I always keep them on a really short, I'm always really cautious on them. And I don't know what that says about me, but that's definitely how I've been lately. So, but watch that breakdown point as a support level. That certainly has been an important price point in the past for us, regardless of my own personal opinions, no doubt. We saw a lot of weakness in the energy sector, finally catching up with crude oil selling off, was able to close below yesterday's low, and equally, if not more important, in my opinion, below that old kind of resistance zone. If we continue to see selling into tomorrow and carry through this momentum, we've broken back below the 20. That would get us back below the 9. We don't really have a lot of support until we get back down in here. I could see this being, setting up for an interesting bearish retracement if we're able to continue this momentum going into tomorrow. We'll have to see if that's the way it plays out, but certainly quite bearish right now. Wouldn't want to buy it. But again, I mean, with just not quite as many reasons to be excited, in my opinion, as a bear for a market-wide or a sector-wide retracement. Now, we can pick stocks within it, and that's how, of course, I think most of us here do it. But just not as excited because, again, we've built on positivity. And maybe it matters, maybe it doesn't, but we've, faced challenges in some areas more so than others. But, we've seen anywhere from small to medium-sized victories as we face these challenges. But over in energy, I mean, this could be one of those areas I wouldn't be opposed to trying to work my way back down into the support level if I got the right signals that, of course, met my trading rules. Of course, tomorrow's follow through on this red candle is going to be step one, right? So we just pop right off of it. Well, all bets are off there. Over in financials continues to be strong, ran into and tried briefly to break that 50-day moving average today. Really wasn't going to be the day for it to happen. As you can see, pushed us back down. Obviously, closing positive, so that's a nice thing. I mean, we're extended. I would expect this to be a pullback point. I would expect, personally, I'm going to look at that as a bullish pullback opportunity, though I don't really sector-wide, expect to go short in the financials if we falter at 50. I get it. I understand some people probably are going to, but, it was showing strength in my mind before, the market really started to pick up. And so this would be more of an area that I'm leaving it alone from the bearish, but I am open to some pullbacks if I'm able to pick some up going into the, first part or middle of next week. Over in the financials, over in the industrials, another nice run to the upside. Kind of came to a little bit of a bump in the road today as we kind of smacked our head yesterday, kind of at that old floor. One of those areas I'm definitely more open to bearish retracement trade within this area, kind of like the energy sector. Just haven't taken out as many challenges. Right now a doji at previous support. This is an interesting, potential area in my mind for bearish retracements if that's where I'm looking. It's just, yeah, it's caught the short-term moving averages, fair enough, but they are short-term, right? And so if I can see some downward movement develop here in the days to come, I could definitely be interested from that point of view. Right now, unlike the financials, they pull back, I'm going to be interested as a buyer. Industrials pull back, I'm either interested as a seller or I'm going to let somebody else have fun right now. So that won't always be true. But, again, I just always want to, if I'm doing anything, at least in my own mind, I always want to feel like I'm going into strength as a buyer or weakness as a seller. And so always makes me feel a little bit better. So really held our own over on tech today, but nothing really to see here that we didn't see yesterday. Of course, we still have some resistance up top over here. I would expect that, this old support level, which is a resistance level, which is just lined up really nicely with the 200-day moving average, kind of acts as our first level of support with our next level way down here. So as long as we're able to hold up over here above that 200, I definitely am okay looking at tech from a bullish perspective. Personally, that's the way I will be looking at it from a sector, overall sector perspective. If we look at the staples, to nobody's surprise, it was able to carry on its really hot run. I mean, it's one of those, when we look at the crude chart, it's so extended to the downside, but yeah, no one wants to buy it, no matter how extended it gets, sold off again today. Kind of just the opposite over in the staples sector, where, we've had one heck of a bullish run, taken out, challenge after challenge, resistance levels after resistance levels. Yeah, we're extended. Everybody's eyeballs can kind of see it, but who the heck wants to bet against this? I sure as heck don't. I don't know about you guys, but yeah, there are better bets against out there. I think we continue to show a lot of strength, although we are fairly extended. But again, that's really nothing new. That's where we've kind of been living over in staples as of late. In utilities, we continue to just hang around resistance. It doesn't know, and I don't know that anybody knows, but I know I certainly don't know if this resistance is going to hold us down and push us back as it's done so many times. We're able finally to push through it and actually get some carry through. This is going to be a to be continued, just like yesterday. Tomorrow, we'll see if we get any indication one way or another, but we are of course hanging resistance. There are a lot of interesting looking utility companies out there that are kind of threatening bullish breakouts of their own. I saw just in passing today. I don't know. I really don't. All I know is this level has been a pain in the neck for the utility sector, and until it's not, I'm going to assume that it is. So always probably, in my opinion, at least the best assumption that you can make. We worked up into that resistance level in the healthcare sector, sold off a bit, but nothing dramatic off of that resistance, as this continues to be an area that the traders are certainly open to trading into. Obviously, we expect that resistance to cause us a little bit of at least short-term pause. I'm open to a pullback. Again, what I'd like to see is things pull back over the next couple of days, moderately, easily, let some of these short-term averages catch up, and then establish a higher level of support for a potential entry point. We still can look at it from a breakout perspective, in my opinion. If we take out resistance, that is always a potential entry point, in my opinion. You won't always take that trade. I won't always take that breakout trade, but I do think anytime a stock's breaking resistance, it is a buy signal. Whether it's enough to get into or not is the $1 million question, right? Continue to watch this area. Again, as we see where everything is in the market, we have to be open to the idea that we're going to get a pullback, or we might be getting a breakout. It's just going to depend. We have really both opportunities in a lot of areas where, hey, if it pulls back and tech pulls back and catches the 200, that could be a nice entry point. Healthcare breaks to the upside, that could be an entry point. So there are some setups of various shapes and sizes that we can be looking at going into next week here. I think looking over at discretionary, ran into the 50, and that's where it called it a day, sold off from that 50-day moving average. No big deal, probably to be extended. These guys have really turned it around. This is certainly an area that if we get that Santa Claus rally, can probably benefit from it. Maybe a little more, in my opinion, at least, than other areas. Like that 50, that to be our short-term resistance level. We can look at this kind of breakout point here, as well as the 200 and this rising 9 or your rising 20, whatever short-term averages you use, to develop as some support if we get a little bit of a pullback. But again, showing a ton of resilience and a ton of strength. as of late. Definitely an area that I will be eyeballing. You know, if we're going to continue to run to the upside, I think these are the type of companies, and I think I'm not alone. It's not like I'm reinventing the wheel here, that can benefit from the, you know, Santa Claus rally, if you will, if that's the way this thing's going to play out. But a lot of strength, but, you know, running into that 50, good place to take some profits, especially as the market was kind of just hanging out today, not doing a whole heck of a lot. Over in real estate, we're able to carry over yesterday's break into more upward movement. So really nothing has changed here. We continue to see bullish signals in this area as we finally were able to break. We do have lots of just different little levels of overhead that we're going to have to contend with in this area. Just still, I don't really love it right now, but I do see bullish signals. But we have, you know, multiple levels of old support or resistance levels that can and potentially will act as challenge zones for us. Watch this breakout point to kind of be that first level of support if you're looking at this area as that first place to prop it up if we see that, you know, if and when we see a pullback in this sector. And lastly, over in communication services, really one of those areas that was not really benefited a lot from yesterday's movement. I mean, it did, but, you know, not nearly as much as some of our other areas, at least in my mind. Closing right at resistance. And really we're pushed down off of that resistance here today. Sector-wide, I think you're looking at either, you know, a break to the upside or a break down here. I mean, right now I wouldn't try to mess around with it personally. And here, that's just me. You can do what you want, of course, but, you know, I think the signal is either a break to the upside through this resistance or a break to the downside through this support from the other day. I'm not much of a play in the middle type of a guy personally, so that's how I'm looking at the sector. I think there's just better looking sectors out there, really whatever side of the coin you're looking at, whether you're looking for bullish or bearish opportunities. I'm not loving that sector right now personally. Over in gold, you know, another day, another drift to the downside, hasn't done anything wrong, but, you know, just kind of has that feel of, is it, you know, you ever going to do something with your life, gold? You know, broke out, you've been hanging, you've had some movement back and forth, you've had an interesting day or two, but most of the time you're just kind of hanging around. Nothing has really changed here. The breakout point, you know, and that 50-day moving average, I'm going to be using as my floor. As long as that holds, I'm okay with it from the bullish perspective. I think the best signal right now, you know, from a bullish point of view would be breaking, you know, the resistance up here above 1240 cleanly, you know, not just sticking our nose up there for a couple minutes on the intraday. I think that's really the best way to look at something that's gone sideways. You know, gold just happens to fit that MO right now. If we break to the downside, close below that 50, below that breakout point, I would definitely interpret that as a bearish signal. Whether or not, you know, that would be enough to go bearish or not, I don't know if that would be enough to change me, you know, that day. But I would definitely look at it as a bearish signal. No doubt about that. That should hold. And again, I'm going to assume it's going to, but I always want to kind of plan ahead. And whenever we see something go sideways, you know, for a long time, it's boring. And we can kind of get frustrated, maybe staring at it every day, wanting it to do something, and it never does. But it gives us a lot of time, you know, to establish where's support, where's resistance, and decide for ourselves, hey, if this breaks support, would I be interested in going bearish? Yes or no? If this breaks resistance, would I be interested in going bullish? Yes or no? So whatever, you know, us as individual traders want to do with gold, when eventually it does come out of this, because it will eventually break one way or another. You know, I don't know which way and I don't know when, but I can't imagine that the rest of our lifetime is going to be looking at gold every day and saying the same darn thing. We have plenty of time to plan ahead. What would I like to do? Would I be open to it? How would I like to trade it? So on and so forth. So as boring as it is to go into prolonged sideways movement, it does create future opportunities. It just does. Sometimes we want those opportunities sooner rather than later, right? But again, we can ask, but we can't expect anything from the market. Really same situation over in silver, showing the more downward movement, a little more pressure maybe, you know, on the daily chart than we saw in gold, at least to me, but really nothing has changed here. We're still within that range. Much like gold, you can ask yourself a couple questions. Do I buy the bounce or sell the bounce at resistance? Do I buy on the wait for a break to the upper downside for my entry point? Really, you know, as you know, was basically become the norm here in the market recap. Nothing to say on gold, at least when we look at its daily chart, and same with silver. Over in the dollar, you know, we had that volatile day as traders were trying to figure out, you know, what it all meant. It's you know, it always makes me laugh, but they were trying yesterday catching its footing, closing above 96, kind of hitting that trend line. Showed some nice upward movement today, and we ended up having a very strong day by the time it was all said and done, over in the dollar, as that definitely has proven to be a strong level of support. Whether we're in the dollar, looking to get in the dollar, or just want to continue to monitor the dollar, I think the way this has played out over the last couple of days has been very important information, because it's just given us more reason to think that this holds, and more reason to think that if we break through this 96, this trend line, the lows from yesterday, things like that, then there's going to be maybe a little bit of a deeper pullback. Now, that's not what my expectations are, but I would expect that if we fail there, that's what we would see. And so however we're playing this, whether it's our stop down here, or hey, I'm really bearish, I'm not, but if I were really bearish on the dollar, that would be make a lower high and then come break this, and there's my sell signal type of stuff. So I think it's done us a favor from a charting point of view. Obviously, a really strong movement here today, but about halfway, in one day, back up to resistance. So definitely some buyers going on there. Interesting things going on with natural gas after that, insane gap on the open this past week. We've really kind of held our own basing high all week long. And I do think, I don't think I'm going to do this, but I do think as we develop up here, because now we just have one more day. I'm not going to buy a breakout on natural gas going into the weekend, personally. So, hope it doesn't happen. But, with the way it's developed, we've kind of developed that floor and that ceiling. Now, this is a lot of strength. So, seeing a break above that ceiling could present at least a short-term bullish opportunity. The problem I see is we're going into the weekend, and as a general rule, at least when I'm talking futures contracts, I don't want to hold those over the weekend. While this gap was certainly out of character on natural gas, things can gap a little bit on the open as the new week begins. But I have found that interesting that it's really, it's had a great reason to pull back. So more than as a potential entry if it breaks that ceiling, I've been kind of thinking about it more of it's had ample opportunity to take profits, and it just continued to hold up. And that's impressive. There's no doubt about that. It's definitely not one, as the week, opened up after obviously the open, but I mean, I would have taken profits on it had I, been in the breakout. I don't know about you guys. And lastly, over in crude, I mean, this thing, I get a kick out of it every time I look at it. I have so many lines drawn on it as potential support levels, and it's just constantly taken out left after right. It's just kind of funny. I mean, this is bearish. I mean, this is we've been saying it for a while now. We've certainly been saying it loudly all week long. There's just no end in sight right now, so we'll have to continue to monitor it. I mean, we are very extended to the downside, no doubt, but that was true a week ago. That was arguably true, several weeks ago. So like that matters, right? Crude can drop just like crude can rise. So we'll continue to monitor these price points. I do think kind of the major one that we're looking at is the next real tempting place from a bullish perspective. Not that I'm saying that I'm going to be interested there, is going to be this long-term trend line down through here. That's really the next spot that if I wanted to get into some crude, that I would be looking. I'm not going to try to capture it off these little short-term levels of resistance or support from days gone by as a potential buyer. So that's going to be interesting to see. I mean, we're either going to get there or not, but I'm very interested in seeing how we react to that. It's around the 58-ish type of area. It's going to be really interesting to see if anybody's willing to at least buy it for a minute when it gets there, if that's the way it plays out. But I mean, overall, this continues to be a very bearish chart. You guys don't need me to tell you that by any stretch of the imagination. So, I mean, it was kind of a dull day, especially after all of the excitement of yesterday in the market, but that's okay. I mean, I liked it. I wanted it, to happen that way. We're still seeing interesting breakout opportunities. There's still interesting bearish retracement opportunities out there. So, I think this is going to kind of turn into a stock pickers type of market, which I would love to see happen. I hate when the market is basically everything's up or everything's down. Maybe utilities and staples are kind of bucking the trend, but for the most part, what we've seen over the last several weeks is every sector up, every sector down. Again, utilities and staples kind of had their own thing going on, but to a certain extent. But I don't like that type of a market as a swing trader. I like that type of a market as an intraday trader because that increased volatility can give us more opportunities and bigger, potential gains on those day trades. But as a swing trader, I like when I can, be bullish, on healthcare and be bearish on energy. That's how I want to trade as a swing trader, personally. And it looks like, maybe, again, I don't know the future, but it kind of feels like, maybe I should say, I can't say it looks like anything, but kind of feels like maybe we're working back into one of those stock picker type of markets, which I think as a swing trader, first and foremost, I wouldn't mind seeing. So, ladies and gentlemen, that is where we find ourselves here after a day. I don't want to be rude to Thursday and say it was boring or dull. So I'll just say it was a day, but we'll see where it takes us here tomorrow. Keep an eye on Disney's earnings. Activision had earnings. I'm not sure what happened with Activision's earnings. It looked like they beat on earnings but missed on revenue or something. They were down pretty big in after hours trading when I just quickly glanced before I hopped on for the recap. So I'll have to take a closer look at that, see what happened there. As a kind of a dork, kind of a gamer, so I'm always kind of interested in what Activision Blizzard stock's doing, whether I'm trading it or not. So, but ladies and gentlemen, that'll do it for the market recap today. Certainly, as always, it is my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the channel and hit that notification bell, and follow us over at Tackle Trading on Twitter to keep up with some of the things that we're doing day to day. If you enjoy the market recap, it's always helpful and appreciated if you do give it a thumbs up to let us know that we're on the right track. Get ready for Friday fun day tomorrow. Make sure you get over to Twitter to vote on the poll for what to discuss in the halftime report with Matt and Tim tomorrow as well. So you can have some fun on Fun Day Friday or catch it on the recording. But ladies and gentlemen, thank you so much for your time. You guys have a great day. Happy trading, and I will see you all in the next one.